Hello and welcome to the day ahead. It is Tuesday, May 17th. I'm Andrew Gagan. Well, stocks on Wall Street struggling to maintain momentum. The Dow relatively flat, with the other majors ending the overnight session in the red, as a rally in energy wasn't enough to offset another slide in growth stocks, as worries grow over a global economic slowdown. Weak data out of China yesterday has spooked investors. The broader energy index touched a 2014 high, while healthcare rose, lifted by a jump in Eli Lilly after the company won approval for its type 2 diabetes treatment. In the red, mega-cap growth names were the hardest hit: Amazon, Google and Tesla, all sharply lower. Well, Twitter extended losses after reports Elon Musk said a deal to buy the company at a lower price was not out of the question. And sticking in the M&A space, Spirit Airlines shares rallying after JetBlue lobbed a hostile takeover offer after its first attempt was rejected in favour of competing bidder Frontier. And finally, McDonald's, the first global brand to fully exit Russia, laying out plans to sell all 850 restaurants in the country following the invasion of Ukraine. The company, which owns around 84% of the venues in Russia, will take a related non-cash charge of up to $1.4 billion following the sale. Looking ahead, the retailer is in focus due to report quarterly results this week. And finally, Treasury yields easing in the overnight session as mounting global growth concerns deepened on the back of a surprise miss in economic data out of China and a sharp drop in New York State factory output. The benchmark 10-year is down around 25 basis points since touching a 3.5-year high last week. And looking ahead, investor focus returns to the Fed, with the Fed Chair Jerome Powell speaking overnight all about inflation. Well, the major currencies were mostly firmer against the US dollar. The Aussie rising from 68.8 to highs of 69.8, currently just below that level. And the latest US data shows further economic weakness, with the New York Fed Manufacturing Index falling sharply into negative territory. The decline in new orders was at the fastest pace since the beginning of the pandemic. This was accompanied by greater pessimism about the economy. And New York Fed President John Williams resolved to bring down inflation from its current too high level and potentially take the funds rate above neutral. But he expects that inflation will decline quite a bit next year. Investors are now waiting on US retail sales data and a speech by Fed Chair Jerome Powell tonight. And in cryptocurrencies, Bitcoin again showing weakness, falling back below 30,000, has since just come back a little. This as the 3-month correlation between Bitcoin and Ethereum and the major US stock indices reached the highest level ever last week, which saw Bitcoin fall to 18-month lows. Well, the Australian share market is set to extend Monday's gains this morning, with ASX futures currently up just over 0.33%. A tepid appetite for risk, though, underlined by China's retail and factory activity, which fell sharply in April as strict COVID lockdowns impaired the economy. However, optimism that COVID cases are receding in China's hardest hit regions pushed global oil prices higher. A Shanghai city official declared that the city will reopen on the 1st of June. On the supply side, the European Union appears closer to securing an agreement to block Russian oil imports in the coming days. The price of Brent rising close to 2.5% to $114 a barrel. Iron ore futures rising more than 1% to $132 a tonne. Nickel fell more than 2.5%, while the gold futures price rising 0.3% to $1,814 an ounce. On the corporate calendar today, Woodside in focus as its proposed merger with BHP's oil and petroleum division gets the final tick of approval from the National Offshore Petroleum Titles Administration. Completion of the tie-up expected to occur on the 1st of June, with shareholder approval sought at the company's AGM on Thursday. And James Hardie reaffirming full-year guidance after reporting a 35% pop in annual profit thanks to strong demand for its fibre cement products in the North American housing market, with a 70 US cent special full-year dividend paid and a second half dividend of 30 US cents a share declared. And that is your day ahead. See you again tomorrow.